Hi guys, welcome to today's trade of the day. And for today's trade of the day, I will be looking at the pound dollar. That's GBP USD. All right, so recently the markets have been crazy. That is why while I normally employ a top-down approach, starting from the monthly, working my way down to the weekly, to the daily, you start seeing huge swings like this, price push down and then straight up, this kind of V-shaped patterns. It's really hard to see on the longer time frame. So that is why today I'll start off with the daily and then I'll work my way down. All right, so as with all technical analysis, we want to focus on current prices. Now, the past prices are important, but it's the current prices that would tell us whether prices should continue going up or down. All right, with that, let's start. Now we see that price made a high here and then price pushed all the way down before retracing back up. So we have 1 point and 2 point. For this, we can do our retracement, right? What we want to do on the daily is to look for resistance and support. So I've done a retracement here. We see that price already surpassed and came back below 61.8. So the next retracement level is the 76.4, right? So with that, let's just highlight the 76.4. Interestingly as well, there is sort of a graphical resistance level here, which is quite close to the 76.4. So let's just call this the daily resistance. All right, and we see here that recent price action, price made a zigzag pattern. All right, so when we see this kind of zigzag patterns, we always take the Fibonacci extension. So we take the extension from this point here to this point here, and then back to the third point. And we see that, interestingly enough, the 100%, one of the key Fibonacci levels, falls in line with our daily resistance. So this daily resistance is a very strong level. Now, because our price is in a retracement after making the lows, okay, we should expect price to continue to push up, at least to the daily resistance. So now we got our daily resistance. Let's look for our daily support. Right, daily support, of course, I will say that graphically speaking, we have a recent swing low over here. All right, so let me just change this. Call this the daily support. Right, that's the recent swing low, graphical support. Okay, and we want to see whether this falls in line with any Fibonacci ratio. We can take a retracement of this whole move, all right, or a retracement of this move, because price came back down and ended here, right? So let's just take those two retracements. Open up all Fibonacci ratios. Okay, and let's take the second retracement. Okay, the first retracement, we don't see price coming close to any Fibonacci retracement levels. Okay, so we can ignore this, or it can actually be considered sort of a zone, right? It can be considered sort of a zone. However, let's just ignore this for now, because graphical is should always have a higher weightage than Fibonacci levels. Fibonacci, it always changes, right? So let's just take a short-term retracement of this. And we see two things. Let me just zoom in here. All right. We have price close to the 78.6 level, right? If we were to change it to close, we see that price actually closed above the 76.4, 78.6 level. Okay, that's one thing to note. Second thing to note is our daily resistance target, negative 27.2 retracement, is also in line with the 76.4, which is also in line with the 100%. Okay, so the negative 27.2 is also a good level to look at. So let me just highlight the 78.6. Okay, I want a 78.6 and the negative 27. All right, so with that, now that we have the daily support, daily resistance, let's go down to the 4 hours. Okay, we have the 4 hours here, right? And like I said, the bias that we had on the daily is for price to continue pushing higher towards the daily resistance. So where would be a good point of entry? I always like to wait for price to make a pullback before going higher, right? If I were to enter a market now, then the risk reward ratio will not be very nice. Okay, so always wait for pullback. No point chasing the trade. So we see that prices have made a push up here. We can take a retracement of this whole move. That's one thing. Secondly, we see that price made a high here, made a push down, and is now making a pullback. So this seems like an impending zigzag pattern. So we want to see how far price can go down. Okay, so let's do the Fibonacci extension first. Okay, so we see that, right, the 61.8 extension falls in line with our daily support. So that's a key level, right? Another thing, like what I said, we wanted to do a retracement. So we take the retracement from the low to the high. And you open up all Fibonacci ratios. A bit hard to see. So let me just zoom in here for you guys. Ignore the other lines. So we see that the extension level, okay, the 23, this extension, there's an extension level here that has yet to be broken, the 23.6% extension. All right. There's also another extension level that's graphical, which is the 38.2. Now, when we do the retracement, so let me just change the color now. When we do the retracement of this whole move, right? Okay, when we do the retracement of this whole move, price has yet to break the 38.2. Okay, so we can actually use this level here as sort of a good entry point. All right, so I'll just select the 38, the 23.6 and the 38.2. Bear with me. And 38. Okay, so we have the levels here. Let's just zoom out again. We have a holistic picture. Okay, so we can actually have sort of the buy entry over here. Okay, and this daily support can fall in line as our stop loss. Okay, and the daily resistance will definitely be our take profit. So remember, the daily resistance is really a small zone. Let me just highlight it so it's easier to see. Okay. So what we have here for the pound dollar is really to buy at the 1.23994 level, and then we play a push up to the 1.27424 level, the daily resistance. Okay, if I were to bring out all the indicators, right, the one that I like to look at is MACD. It's above zero. So as long as it's above zero, it's still in a bullish environment. But more convincingly is when we look at the exponential moving average. Now I like to use 21 as an arbitrary number. Either that or I normally use 34, right? Both works. Okay, we see that when prices are trending, okay, price holds really nicely below the 34. And now when price breaks above, it holds nicely above the 34. Right, so 34 seems like a nice moving average number, a natural moving average, what I call it. So price is above moving average, right? So and earlier, as we saw, MACD was also above zero in the bullish territory. So definitely enter for buy towards the take profit here. All right, so that's all we have for today's trade of the day. Thanks for tuning in. Stay safe and take care.